Everybody, welcome back to Know Before You Owe. Brian Parker and the Brian Parker Group. Going to take a couple of quick minutes with you here and talk about the 2025 interest rate forecasts. As I share this information, I will tell you I am not the expert, but I'm really good at listening to the experts and following what they say. And I've set in on 3 different live webinars already this year. I'm also able to see the National Mortgage Bankers Association interest rate forecast, which is out there. It's public information if you know how to go find it as well, on where interest rates are going. And so let's just say this right here. If you're a buyer waiting for interest rates to drop, you're going to end up costing yourself more money because home prices are going to keep coming up and probably at a faster rate than when interest rates come down. There's a previous Know Before You Owe video, the 3.5% interest rate. If you're waiting for that, you're never going to see it again. If we do, we have really, really bad problems in our economy. And I think the direction of interest rates and how quick we see changes will be relative to inflation coming down and really the impacts on tariffs and what that may have to do with it. And I'm not going to get in about tariffs. But the forecast that I've set in on the webinars, they're predicting that we probably don't see even a consistent 6.5% interest rate until at least the third quarter this year, maybe the fourth, which means home values are going up every month between now and then over the difference between maybe a 6.5% interest rate to a 6.875 to a 7.125 interest rate right now, depending on the kind of the day in doing that. Also with that, if you go to the national MBA forecast, it predicts that we won't see that 6.5% probably until fourth quarter of 2025. And then even going into 2026 and 2027, their current forecast is we probably don't see a rate below 6.4% or so. So that means if we get to 6.5%, that's probably a new baseline. And for an old dog like me that's been doing this 25 years, 6.5% is historically a pretty good baseline. So I know you would like your payment to be lower. You would like your rate to be lower. But as you wait, that house price goes up. So get with your local mortgage professional. I'm glad to help you. I'm licensed in all 50 states. Talk about buying strategies, how you can discuss those with your realtor, how you can set up your financing a certain way. And then when rates do drop, you get an opportunity to refinance. And I will tell you, if you have a mortgage that's over $325,000, if you're able to cut even 0.5% off that rate, you're going to refinance because you don't know if rates keep going down. And you know what? You might refinance more than once or twice, and that's okay because you're going to be saving money every time you do that. I'm Brian Parker with Know Before You Owe, hoping that you can take this information, assimilate it, and make the right decision that's good for you and your family. If I can help you, reach out to me. God bless. We'll see you next time. Take care.